And guys, so in today's video, I wanted to talk to you and break down this absolutely beautiful 1 to 3 risk to reward trade that we took on gold last week. Now, as you can see, I sent this out into the Discord and myself and all of the members were able to take this trade that gave us a beautiful 3% gain on the account. So here's a screenshot of my profits that I posted in the Discord for everyone to look at. Now, as we can see, this gave us a nice 3% gain on the account. And as of last week, that puts us at a beautiful 10.5% for the first 2 weeks of April. So that is really good to see that we are doing so well in the Discord. So if you haven't joined already, I would highly suggest going down in the description and clicking the link to become part of the community so that we can all grow together as traders. Now, whilst you're down there, I would also ask you to please kindly like, comment, and also subscribe. But let's jump straight into the analysis for this trade. So first things first, let me remove this right here and replay the chart so that we can break this down together as if I was seeing it with fresh eyes. So the first thing that we noticed when we initially came onto the charts is we noticed that gold is very, very bullish, right? Gold has been in an uptrend, breaking all-time highs, and it has just had a lot of bullish momentum in the market. As we can see, we've created a series of higher highs, higher lows, higher highs, higher lows. So now, after we've created all of these higher highs and higher lows, we've come to the conclusion that we are in a nice bullish trend. Therefore, we want to go with the trend and we want to take trades that are in line with the trend. So we're looking for buys. So what do? Well, we first start off by identifying where we are in terms of structure. So we can see that we've just broken a higher high and we've created a new higher high. Therefore, our next anticipation is that price will come down and give us a higher low before a continuation higher to give us a new higher high and break structure to the upside, right? So following structure, we now know that we need to identify key areas in the market that price can potentially come to before giving us the next leg up. So before we do any of that, we then now have to also identify where we are in terms of liquidity. So what can we see right here? Well, we can see that we've created this sort of trend line liquidity that gold has been bouncing off of. So we've had all of this support right here, price went up, came back, we had the support, price went up, and now it's coming back down to the support. So because this is now seen as a support zone, this has now turned into our liquidity, right? So because it has turned into our liquidity, our next step is to identify where price can come and purge that liquidity. Well, as we can see right here, we've got this beautiful order block that we can mark out. And the reason why this is an order block is because it meets all three of the criteria that I teach inside of the VIP group that we need in order for this to be a valid order block. So we've identified that price can potentially push down into this zone. We've got a nice fair value gap just above it. So if I also mark this out as a reference point for us, we've got this beautiful fair value gap just above the order block, and we've also got this nice and beautiful trend line liquidity resting just above. So this is gearing up to be the perfect concoction for a beautiful trade setup. We've got liquidity, fair value gap, and an order block. Now, coupling all of these things together, it gives me a lot more confidence that this trade is actually going to play out exactly like I want it to. So now that we've identified all of these areas, well, our next step is to simply now wait. And we must wait for price to actually come into our zone so that we can then drop down to the lower time frames so that we can then look for our entry criteria so that we can take this trade. Now, the reason why we look for an entry criteria is because if we didn't, then we would be putting limits in all sorts of places, such as this fair value gap, this order block. And what if the fair value gap doesn't hold and price just blasts straight through it? And what if the order block doesn't hold and price just blasts through it? So because there are all of these variables that price can just blast straight through, we then have to look for entry criteria so that price starts showing us the strength that yes, it is wanting to reverse and going the direction that we anticipate it's going to go. So once we get the confirmation, we can then execute the trade because by then the story has played out and the analysis has been done. So once we've identified this area, we can drop down to the 30-minute to see if we can refine it anywhere. We can go down to the 15-minute. And as we can see, this is a very, very nice order block that we have right here, and is broken structure to the upside. So I'm very happy with leaving this as it is. And all I'm simply going to do is drop down to the 1 minute and just play price on and wait for it to come and enter my order block. Now I am just going to speed this up a little bit because I know it will take some time. So if I now go back just a little bit, what we can see is that price absolutely purged all of that trend line liquidity. And if I play this for you right here, what we can see is that price absolutely purged all of that trend line liquidity as we thought it would, right? So after we've purged this liquidity, we've now tapped into this fair value gap. Now, in order for us to execute a trade, we have to wait for our entry criteria. And our entry criteria is that we need a market structure shift. Now, as we can see, the market structure shift on this is very, very high. So we would be waiting quite a while for price to actually reach all the way up here before giving us our entry criteria. And as we can see, price then immediately purged the fair value gap as well after tapping into it. Now, this is another reason as to why we don't put limits on these zones, because as you can see, price simply just cut straight through it like a knife. So we can have removed this fair value gap because price did not respect it. And as we can see, it went and tapped straight into the order block and it gave this crazy reaction. Now, again, this reaction is giving me more hope that this area is definitely going to hold. And again, for us to get a market structure shift, we now need price to come all the way up here and break out of this zone so that we can then look for an entry somewhere down here to take price up. Now, because that zone is quite big, I would wait for price to come down a little bit more, take this area out. So take this out, push a little bit lower into the order block before giving us our entry criteria. So if I play price on, we can see that that is exactly what price does. It comes in, sweeps this low and pushes lower into the order block, which is perfect because that's exactly what we wanted to see. Now, again, if I play price on, what can we now also see? Well, price has now started to create one of our entry criterias. It's created our entry model. And because it's created our entry model, we can now start to identify that there was a buildup of liquidity. Price then swept this liquidity. And then after it swept this liquidity, we now need it to break structure to the upside to give us that market structure shift. Now, this would be our most relevant area where price has to break in order for us to confirm a market structure shift. Now, let me quickly just clean up all of the charts so that we have a nice clear chart to look at. And as we can see, we now need price to break this high to give us a new market structure shift for us to then get involved with any sort of buys. So if I play price on, we can see that price does in fact blast straight through and give us this beautiful market structure shift. Now, after we got this, I then identified that this order block right here is the area that took all of this trend line liquidity and then broke structure to the upside. Now, because this area is the one that broke structure and took the liquidity, I had high hopes that price would return back to this area to give us our entry, which is why I sent it right here, gold longs, and we were entering off of this order block right here. Now, that is how I had it identified. So I had my entry right here at the open of the order block, stops just below the low. And now for our targets, we were actually targeting at this high immediately, and then this would be our second targets. So our high right here is where our initial targets were for a nice 1 to 4 risk to reward. Now, if I play price on, what we can see is that we also have to be fluid in the markets and not be bogged down with the analysis. Because as we can see, I was hoping that price would come into this order block to give us the entry. But what does price do? It misses us by a hairpin, absolutely just misses us and starts flying. So it missed us by a few pips and then pushed to the upside, and it broke structure right there. So if I identify this on the chart, we can see that price now broke structure to the upside and created a new higher high. Now, this gives us our second entry model, and that is the confirmation entry model. So because of this, what I said in the chat is that I am now going to be taking a secondary entry right here. So when price came in and tapped off of this zone, I moved my entry here and then I put my stops just below that low, and I was still targeting initially right here as initial targets, and just above all the way here as our primary targets. So as we can see, this now turns into a nice 1 to 3 risk to reward. So if I actually mark this out as it was, so stops were just a little bit lower, and this is how we had it identified. So it was a nice 1 to 3 risk to reward, and I said right here I'm taking an early entry, and I sent the screenshot from inside of my MetaTrader so that everyone could also see that I had just executed a market order and I was getting involved in these buys. So because price didn't come all the way down here, I told everyone to then delete this limit because price had now broken structure to the upside, and I felt like price was ready to start moving in the new direction. So if I play price on, what we can see is that price then immediately starts running away and immediately starts targeting our take profit, and there you go. Price then runs beautifully straight to our take profit, and we closed it fully there for a nice 3% gain on the account. So as we can see, this was a beautiful top-down analysis where we were on the higher time frames. We identified key areas in the market that we felt like price could return to before giving us the reversal move. We identified that there was liquidity resting right here that price would have to purge in order for it to come all the way down into our zones. We identified the fair value gaps that we need to have a confirmation entry because we can't just put a limit on any fair value gap or order block, because if we do that, the chances of us losing are quite high because we have no real confirmation of what price is trying to do. So I hope this gave you guys a little bit of insight into exactly how to do some top-down analysis and actually frame up a high quality trade and walk through the entire process from taking it as an idea to executing the trade. So if you did get some value from this breakdown, then please don't forget to leave a like, comment, and subscribe. And on that note, guys, I will see you in the next video.